Hey everybody, my name is Casey Lau. I'm the co-host of the RISE conference, and today we're talking with some accelerator leads to talk about the future of accelerators and early stage investing. So first up, I'd like to introduce you to Pat Riley from GAN. Pat, say hi.
Hello, everyone.
Great. Ravi Balani, Managing Director at Alchemist Accelerator.
Hi, everybody.
And fresh off the golf course, Eugene Kim, Managing Partner at SparkLabs Korea.
Hello.
Okay, so just to kind of familiarize the audience with a little bit of what you guys do, Pat, let's start with you. What is the GAN and how does it work with accelerators?
Yep. So the GAN is a community of the leaders who run accelerator programs around the world. So we work with 122 accelerator programs in over 160 cities globally, of which SparkLabs is one of the premier accelerators that we get to work with.
And where are you based right now, Pat?
I am in Denver, Colorado in the States.
Great. How about you, Ravi? Talk a little bit about what does Alchemist do?
Alchemist is a venture-backed accelerator focusing on founders that are building disruptive ventures that monetize from the enterprise. So unlike other accelerators, our original anchor LPs were some of the top VCs in Silicon Valley, Khosla Ventures, DFJ, USVP, Mayfield Foundation, and about a dozen corporates, including Salesforce, Cisco, GE, Siemens, and a bunch of others. And so we focus on startups that monetize from enterprises as opposed to consumers. And we have a longer program. It's a 6-month program. We have programs in the United States and Europe. And we distinguish ourselves by focusing on a smaller cohort. Our class sizes are limited to 25 companies.
Great. And Eugene, just for the sake of the international audience tuning in today, what does SparkLabs do?
Yes, we're also a venture-backed investment-based accelerator based in South Korea. We run 2 cohorts a year. We're kind of general in terms of sector. We select about from 10 to 12 teams per class, and then provide them with a 3-month program, and then eventually help them get funding through our demo day. We've also kind of expanded our program from Korea to also Taiwan, which is headed by Edgar, and they're also on their 5th cohort. And also we've also helped expand it out into Australia as well, where we're focused on a agricultural tech focused accelerator called Cultivate. That's also, but that program is only a 1-year program. So we kind of started in Korea and kind of expanded out into Taiwan and Australia and hopefully other parts of the world in the future.
Great. Excellent. So great to have you guys here. So the discussion today is around accelerators. And Pat, I guess this is the best place to start with you since you work with so many accelerators around the world. What do you think makes a truly great accelerator and what role should they have in their community?
So 2 really good questions to start us off. So what makes a really good accelerator program? I'd say what you see most accelerators do is help companies move the needle in terms of their product, help companies move the needle in terms of their investment capital, and help companies move the needle in terms of their connections. So what I mean is, if you think about an accelerator program, right, they operate 3 to 6 month long programs, where typically, especially in pre-COVID times, 100% of the accelerators we worked with had an in-person component. So all these startups would come to the accelerator office, and the average accelerator has something like 120 mentors that surround usually 10 to 20 companies. So companies are getting this intense amount of support for their product from day one. And then over time, right, what the accelerator is doing is saying, well, hey, maybe you're working on ed tech. Great, let's bring in some people who really focus on ed tech into the fold. Or maybe you're focused on ag tech, like you heard from Eugene. Great, let's bring in all of our ag tech friends to come in and help you. So then you're getting these amazing connections. But finally, at the end of the program, accelerators also do a really good job bringing in investors from the community and then at large who want to actually get to know early stage startups. So what you see is the average company leaving accelerator programs raising $414,000. That's globally. That's across the board. And this has been happening for the last decade. I mean, this is nothing new. And the success just continues to happen over and over again. But to answer your last question, like, what does it do for a community? I mean, you imagine what it's like having these programs centered in your community. They're bringing together mentors who never worked together with startups before, right? They're bringing in startups who've also never worked together before. They're bringing in corporates who actually want innovations. And they're just creating these efficiencies that didn't exist before accelerators were as prevalent as they are today. So not only are they helping startups launch like we talked about, but they're also providing this incredible community that didn't exist before they were in places like we see all around the world today.
Yeah. Ravi, where are you based right now?
We're in San Francisco and Munich.
Okay. So same question to you. How does Alchemist sit in the ecosystem that you are now? What do you think the role is for an accelerator in general outside of the Bay Area that can, connect startups with the community?
Well, the big thing is that your company won't die because you have a bad idea. So very few companies will die because the ideas are intrinsically bad. The reality is that you will die because you don't take off within a limited period of time. By taking off, that means cash from either investors or customers or energy, and effectively you're self-funding yourself from founders. And so the first thing about Alchemist that we've been known for is how well we were able to have companies take off in terms of funding. So we were rated the number one accelerator by CB Insights. Did this study only once, but they rated the accelerators in terms of how much money the companies raised. And Alchemist was rated number one. Y Combinator was rated number two. And that's not to be dismissive of Y Combinator. They take 10 times more companies than we do. It's very impressive. But I think the way that we fit in the ecosystem originally was partly because I'm a former VC. So I was at DFJ and I led the first rounds in two companies that became unicorns. One was Twitch, when it was Justin TV, and the other was a company called Pubmatic, which is now a $2.5 billion company. And so I started Alchemist with a network of VCs. And I think where we have been particularly helpful is in ensuring that the companies maximizes their chances of taking off with funding. And then also where we've been very helpful is if you're building an enterprise startup, we think it's a fundamentally different accelerator and community than if it's a consumer-driven startup, because you really need to build two different ventures. One is a product for your users, and the other is a business model for your customers, effectively. And so we're very skilled at that. So that's where Alchemist has sort of fit within the ecosystem. And then we're also, I think we're particularly great for anybody who needs that to get plugged into a Silicon Valley centric community. We have one of the top networks. It's definitely more Silicon Valley focused, but obviously it's now expanded to other areas as we're expanding too.
Before I get to Eugene, I want to ask the both of you that question. Does Ravi, do you have an unfair advantage by being based in Silicon Valley? And Pat, do you see that being based in the Bay Area being a pro or a con in terms of having an accelerator? So Ravi, start with you first.
I think it's our differentiation is that we have a very deep Silicon Valley centric network. We have 30,000 people in the network. It is very Silicon Valley centric. And that's not to say that Silicon Valley has a monopoly on innovation. I think all innovation is going to happen everywhere, and everywhere is going to get stronger, Silicon Valley as well as all these other pockets around the world. But I would say that historically, Silicon Valley has had a stranglehold on most of the venture-backed companies that have been created. And so it's nice. The big advantage that we have for international founders is that, especially during COVID, is that our platform is like Silicon Valley as a service. So you don't need to come to Silicon Valley, and you can still get access to all the top founders that have built at least $100 million to $1 billion companies, the VCs, the customers, et cetera. So that is that is what's harder to find right now, is really smart advice. There's lots of mentors, but it's hard to find those founders that have built businesses worth $100 million or more. And we have a lot of them just by virtue of being in Silicon Valley. Yeah. So I think that is one of our competitive advantages. At the same time, every virtue is a vice. And I think, what's great about founders outside of Silicon Valley and just confidentially, I shouldn't say this, but
we're alive.
but we talked to some of the top VC funds, and we asked them, which companies do we want to should we screen for them? Like, what is their criteria that they're really looking for? Many of the top funds right now have data scientists that are mining all this data. And one very prominent fund, I won't mention who it is, but they told me, we don't want to see companies that are started by Silicon Valley based founders. So please screen for us. We prioritize international founders or first generation Americans. And I think that speaks to the fact that the real core asset, which is the founders, don't have to come from Silicon Valley.
Okay, that's great. I'm going to put a pin in that because I want to return to that. It's very interesting. Patrick, what do you think, since you see it all around, do you think that having an accelerator in, say, California even is going to have an unfair advantage over, say, one in Washington or, I don't know, Canada?
Yeah, no, there's trade-offs no matter where you go. What you have in Silicon Valley is the most investment capital in the world, right? The investment capital per capita is just off the charts. So I'd say number one, it's just a huge benefit. And yet I also think there are cultural components, and I just say there's maybe a tension you may get elsewhere that may be that may be more helpful for your company. So an example would be in Iowa, this farming state in the United States is so focused on agriculture, right? It's how Iowa runs their economy. So Iowa has an accelerator called the Iowa Ag Tech Accelerator Program, and I would say if you're going to start an ag tech company, that is an amazing place to go. Why? Because John Deere is at the door funding the accelerator program, as well as all these other groups that are in farm tech. So, and along with it too, you're going to get farmers who are high investors coming into the door, mentoring you, and you're going to get a little more of a mentorship that's focused on that specific vertical. So what I would say is but what I tell that company once they're going to raise their Series B, Series C to 100% go to Silicon Valley, it's like, yeah, probably, because that's where, if you're looking for money to scale, that's where I'd say the best money to scale is, and I'd go there in a heartbeat.
Okay, that's interesting. Okay, so sorry, back to Ravi then on that. So because COVID has proved it's pushed technology so far ahead. I mean, we're doing this like this. I don't know about you guys, but I wasn't really on this Zoom every day as I am now, right? And so I think a lot of people are using it now. So accelerators like SparkLabs, like almost every accelerator in the world is doing these virtual things. If I can get a Silicon Valley as a service with access to, the people who, Silicon Valley will, everybody knows there's a lot, not only the rich people are there, but also the people who've taken these crazy moonshot bets on ideas that maybe in Hong Kong or say in Calgary, they wouldn't understand these ideas. Whereas if you pitch somebody in Silicon Valley, somebody will find a way to figure out if this is a good idea or not. So going forward, because we're talking about trends in Accelerator, you think that this will become more of a norm where people from Korea, people from Taiwan can access Silicon Valley through a virtual accelerator and get as much value out of it as if they had to actually go to the US to do it?
Yes. I mean, I think it's going to become more equal. It's still, and I think it already is. And we have all the data with our classes right now. Our current class is the most global we've ever had. And we have founders that would not have participated pre-COVID because they would not have been able to come to Silicon Valley. And our financing levels are increased during COVID. That's partly both a function of, as much as it's about flattening the world with technology to connect Silicon Valley VCs with international companies, it's also just due to fiscal policy and how cheap cash is today. I think there still is there's a few still fundamental issues. So about a third of US VCs cannot fund non-US C Corps. And I don't think that's going to go away anytime soon. That's due to tax issues. So I don't think you can get your hopes up that if you're a Korean-based company, a US VC is going to see the light and the merits of your business and just fund you over a Zoom call. Most Silicon Valley-based VCs still want to fund companies in areas where if they succeed, they want to drive more deal flow that's relevant for them. And unfortunately, for the majority of US VCs, they're just categorically not interested in non-US C Corp companies. And it's only a minority of companies that are truly global funds. Those global funds are taking bets in a lot of other geographies. And you're seeing those emerge, especially like Estonia, Singapore, Israel. You're seeing some Silicon Valley VCs make strong bets in those countries. But at the same time, the big virtue of Silicon Valley, is and I guess it's not even Silicon Valley, but there is a virtue of if you can have an in-person program where there's a fellowship of peer mentors and other mentors, our founders miss that. And so I think for Alchemist ourselves, COVID's been a benefit because we've learned things that are more effective virtually than they were physically. Our demo days are better by all parts. virtually. Our investors like it. Our founders like it. The funding rates are higher. The number of people that can participate is higher. But the bonding across companies is harder in our experience by being fully virtual. So I think we're going to have a hybrid program.
Great. Good information. Okay, Eugene, let's talk about Korea for a minute. Before we started this call, you gave us some amazing knowledge that I didn't know about either, that Korea has 300 accelerator programs. For some of the international people that are definitely listening to this, can you talk a little bit about what is this program? Why there's so many programs in Korea? What are they focusing on, and who are they there to cater to?
Yes, I mean, in Korea, there was a law passed that allowed accelerators to be supported by various government funds, and you can establish entities for that. I mean, SparkLabs, we've been in Korea before this. We started back in 2012, and we've been kind of one of the pioneers in bringing the accelerator model to Korea. Especially the venture-backed or investment-based model, right? I think in Korea there were, obviously there were incubators in the space before. There were a lot of just real estate plays, spaces for startups, and so forth, but not really, an accelerator model where we invest in every company that we select in. We provide them with a program where we, again, as Pat mentioned, we provide them with a community, with a network, with things that they need help on. We bring in experts. As Ravi mentioned, we try to bring in Silicon Valley as a service as well. We have a mentor network that is a lot of them are successful entrepreneurs in the US and globally, and that's what we kind of focused on, more of a kind of a global approach to targeting startups that want to go global, and we kind of bring that expertise to the table. And so we've been doing this in Korea for the past 8 years, almost 9 years now, and there's been various types of accelerators forming in Korea now, right? Because there's so many, right? There's some accelerators that actually don't even have a fund and don't invest, right? But they do provide programming, right? There's some corporate centered or backed accelerators as well, right? And there's also nonprofit accelerators as well in Korea that have formed. So there's a lot of types of different accelerators and different players in Korea right now. And so I think as time goes by, I think the successful ones will probably remain. But there's also the aspect of the Korean government outsourcing some of their support for accelerators to the accelerators in Korea, right? In that sense. So there are government-backed accelerator programs that are actually being run by private accelerator groups in Korea as well.
Interesting. So Pat, hearing this, have you noticed any other countries that have the same kind of government support to accelerate accelerators, or is this a special case?
Oh my gosh, you see this in places like, Singapore, you saw this take off, where the government was behind a bunch of accelerator programs. You saw this too, not to the extent we're seeing, not to the quantity extent you're seeing, but in New Zealand, you saw this taking off where the government sponsored a bunch of accelerator programs. Like even here in the States, like that, literally, I was on a phone call yesterday with the Small Business Administration. They're putting out a grant for 50 accelerators in the States to go and get some funding.
Wow.
So I would just say, yeah, you see this, you do see government funding for this. And I think the reason is pretty, it makes sense. Like accelerators do not cost that much to run across the board. And they're incredibly effective. They're in GAN, there's 16,000 startups that have gone through one of those 122 accelerators in the last 10 years, and only 22% of companies have gone out of business. Only 22% of companies have gone out of business. Wow. And today, out of all those companies, 14% are now making over $1 million a year in revenue. And you just go, governments hear that stuff and they just go, I want more of that. I want companies that are going to stay around, that are going to get revenue, and they're going to ultimately like continue to help our economies. So I think because of that, like as much as I wouldn't say I'm the biggest fan of government funding, I think you're going to continue to see it, especially in emerging economies, because they see the benefits of the model.
Interesting. How about you, Ravi? Do you get a lot of people applying that have been through another accelerator that may have been government backed in another country?
In certain regions, and again, I think there are certain areas like Korea that have flooded where the governments have been effusive to say. So it's almost impossible not to be funded, having government seed funding. Europe is very much like that, where there's regional specific government free money effectively. So it's the entrepreneurial thing to do is to make sure that you're taking advantage of that. It is a double-edged sword, of course, because if you've been through more than one accelerator, an investor will naturally say, why didn't it work the first time? Why are you going through a second accelerator or a third accelerator? Yeah. And so you need to think about that narrative around that. And the most dangerous thing is anybody can be a mentor. So it's not the bar doesn't have to be high necessarily to be a mentor. And you need to be careful as a founder on who you're taking advice from, especially for strategic critical decisions, because the first rule I think is do no harm. The best thing about these government-backed programs is the cash, is that you get money. And that's the best thing that I think governments can do, is just get more money into the hands of founders quickly. And the founders will know what to do with it. But it can be dangerous if the founders get, pushed in certain directions that are actually not good for them.
Yeah. Eugene, how does SparkLabs then is able to differentiate itself amongst 299 other accelerators in Korea?
Well, like I mentioned, when we first started in Korea, our advantage was we were the first. Okay. Second, we had a global kind of angle, right? We were focusing on companies that wanted to go global, and our partners Bernard, Hanju, Jimmy, and also Jay, Frank, and also a lot of our mentors, and including myself, all had experience doing global business, right? Either entering a new market, starting a company, and opening offices in 10 more countries and cities, and so forth, and successfully doing that. And so we brought this network, this really global network of mentors that the startups could access, and that's what attracted, I think, a lot of the top startups to come to SparkLabs in the beginning. And luckily, we had some success with MimiBox, as you know, and a lot of other companies down the pipeline. I think what really makes, again, a really strong accelerator, in my point, is the same thing as we look at startups, is the team, is the people, right? Who makes it up? What experience do they bring to the table? How can they help you grow as a company? We focus on seed in the early stage. So we do a lot of things. I mean, we do pretty much everything possible to help the company grow. It could be anywhere from testing the product and giving them feedback, introducing them to UX UI expert. It could be helping them with PR. It could be anything from giving them feedback on the pitch, to even helping with biz dev, right? And we do everything possible to help the startups grow during the program and beyond, and then show that traction that they were able to perform during the 3 months at Demoday, so to get that funding, right? And then it's our job, obviously, of course, to have the network with the investors to bring them to Demoday and for them to invest. So yeah.
Great. So Pat, we started talking about this a little bit with the Iowa example, but if a startup goes to the GAN homepage and starts scrolling through all the list of all the accelerators, what should a startup be looking for when they are looking at these accelerators? Besides, maybe a Silicon Valley based one, would it be based off of what they're doing, what vertical they're in, or what would you recommend?
Yeah, where I would recommend is actually, before you look at any accelerator, just look at what your company needs at that very moment. And what I mean is this: you might need funding. If that's the case, like I would go and call the Alchemist Accelerator like right now, right? They're in the middle of like some of the biggest funding opportunities you have in the world, right? Yet if you're trying to scale to Asia, it's like, okay, great. You probably need to call SparkLabs, right? Because they're the hub, right, of so much that's happening in Asia. But I would just first of all go, number one, what do you really need as a company? And then like number two, what's sort of the format that you want to go through? Is this thing where you want a lot of mentorship along the way? Well, great. Make sure you're asking how much mentorship you're going to get along the way and from whom at the accelerator. Or is it a bunch of connections? Well, great. Like when you call up each accelerator, ask them like, hey, I have this type of company. I'm looking for this type of connection. What can or can't you give me? And then I'd say the final thing is like, hey, if you're looking for peer support, what type of peer support do they offer? Especially when you're virtual, are you just connecting one-on-one with the accelerator managing director who runs the program? Or are you actually doing a cohort model where you're around peers and actually challenging one another? I would say this, like, right, there's literally 20 things an accelerator can do. And we talked about at the beginning, like most of it can be broken down to either capital, connections, or help with your product. But I think, first of all, you have to sort of rank order what you need and then make sure you're going in and asking that of every single accelerator. And I promise you, they will have a great answer for what they're actually able to provide or not along the way.
Great. So Ravi, when a startup, you only take a limited amount of startups every cohort. Maybe you can shine a little bit of light on what you're looking for and what are the little things that you might, you see that are red flags that kind of make you think we'll pass on this company. So I'll ask Eugene the same question as well.
We're looking for something, if it succeeds, it'll succeed really big. So we don't really care about the potential for failure. So we're not looking for things that are safe, well-proven bets that, if that have mitigated or prevented any failure risks. The rarer thing is if it succeeds, can it become one of the 50 companies every year that ultimately become worth at least $500 million? And how big does that get? The red flags then in that are usually to do something that's big, you need to be thinking a little bit differently. And so if you're trying to just do a venture in something that's a hot space of the day, you're going to have a ton of competition. And even if it does become a hot space, your returns are going to be distributed across a lot of different players. So usually what that means is it's a red flag for us if a founder says, I'm doing this because I always wanted to be an entrepreneur. We don't like that. So we're looking for founders that couldn't do anything except for the venture that they're creating, where there's some unfair advantage that they have with that one thing. And they're thinking about it in some unique way about how they're thinking about that. There's a bunch of other elements that we are looking for. We only fund technical teams, and we're looking for technical people that have this unique combination of being able to step back and understand broadly what they're trying to do, but then also can really tactically know the next 3 things that they need to get done as a team. And so there is this bifocalness that our best founders have, where you can sell a big vision and then you can also execute and get things done. And that's a little bit of a less tangible thing that comes out more in our interviews. And then we're looking for ideally people that have shown distinction in some way. That either is by pedigree of school or the type like a bellwether company that you've worked for, or if you haven't had a strong education, if you've surrounded yourself with great people, or if you've just had disproportionate results in things that you've pursued. So some evidence of being a little bit weird and a little bit distinctive.
Would you define Eugene as a little bit weird, just for the record?
Well, I think that anybody who is a champion of entrepreneurs, I don't know Eugene well enough, but just based on what I would say that Eugene is a lot of weird. Like
great.
I think there's somebody who it takes a unique person to have a Go Blue Michigan sign on the back and also be in the throes of Korea. 2 totally different worlds. To straddle those requires some agility
and high pedigree with Michigan.
Oh yeah. Michigan's great.
Yeah, exactly.
Ravi, before we move on to Eugene, I just wanted to know, can you maybe just talk about a little bit of 1 or 2 companies that you brought into the program that just to give us a case study, like what does a $500 million company look like when they knock on your door and they're worth like nothing?
Yeah, I'll give you 2 or 3. So one is we funded a company, Getty quantum computing. So there's a lot. So my background, I was at DFJ. I did Twitch when it was just in TV, and then I also did a company called Pubmatic. I can talk about this, but I know people know about Twitch. And but Rigetti is a quantum computing company. They joined it was a solo founder, and there's usually rules that you don't admit solo founders to accelerators. You want there to be teams. This is a solo founder who is not just building a software company. He wanted to build a quantum computer. Okay, and at the time when we funded them, it was considered more of a science project. Quantum computing. It was considered one of these things that was interesting, but really not something that was a startup or commercializable. But if you could do it, it's not just $1 billion company or a $10 billion company. It's a $100 billion to $1 trillion company, because you're fundamentally changing compute power across a whole bunch of different industries. And it was something also that the way that he was thinking about it. So if anybody is thinking about hardware or hard intensive systems plays, like we've also, so Rigetti has gone on and raised $130 million. And there's still a lot of risk, but they are, I think, one of the darling quantum computing companies. We were their first investor. We were the first outside equity holders. And when we funded them, there was a lot of stuff that could have gone wrong. But what was critical was that there was a path where they could get to revenue in 2 years by de-risking parts of the quantum computing stack in order to have a business model aligned against the technology development that could then ultimately lead to building a full-fledged quantum computer. So even if you believe that you could just succeed within the first 2 years, it would be okay. And they've taken off. Now, we've done other companies. I don't want to brag. We've had companies that have not taken off. So we have a company called Positron. I hope they're okay that I talk about this. It's an antimatter company. They're building antimatter to go to Mars. It's the next SpaceX team. And the plan of attack was that to build antimatter, you have to extract positrons. But there's a use case where you can use those to clean semiconductors. So it can be used for electrical engineering quality control, basically. And that was their near-term market, where if you got that done, you could have $500 million to $1 billion market. And then if you could go to Mars or do interspatial flight, it was obviously the sky's the limit. But they went through difficulties. But one of the unintuitive insights that I want you guys to think about is go after something big, because there's lots of resources for you, but then think about how you map the technology plan with monetization opportunities so that you can create a story where even if you don't get to stage 2, 3, or 4, you still have, a $500 million company.
How can you fail at antimatter? Like, that doesn't make any sense.
Well, I don't think
that's a joke.
I actually don't think you fail at most companies. It's just a question of timing. That's most ventures is actually not a question of if, it's just when. And
I think it's amazing that you have a company come to you with a quantum computer. Kind of makes sense, but somebody's coming to you like, listen, Ravi, we got an idea for an antimatter startup. What do you think?
Yeah. Yeah, those are we can tell you about others. We've got some crazy companies. So
please, I want to hear a couple more, because I think it's very inspiring too. That kind
of like this. So I think so I think that it's always fun as a founder to say, well, I'm not that crazy. So then you get like sort of calibrated. I mean, we had a company called Cambrian Genomics. They were building a 3D printer for DNA. So how there's 3D printers. They had a 3D printer that could concatenate A, C, T's, and G's, so DNA base pairs. And so their first product were new life forms that actually had never existed before. And the issue was that you could, you have all these computer scientists that have these fictitious genomes that would self-replicate, but using traditional biological methods today, it costs about $1 a base pair to artificially create a DNA strand. So to create, and DNA has like 1 billion base pairs, so it costs like $1 billion to create something. They had the ability to do it for a penny a base pair. So they could suddenly make these fictitious DNAs printable. Their first product was a plant that would fluoresce under light, so that if that would have its own fluorescence, so that if you're in India and you don't have access to the grid, you could theoretically read under this plant.
Wow.
They raised $17 million, but the CEO committed suicide. And I think it's one of these issues also around mental health and being a founder, where there's a fine line when you're a CEO between selling a dream that needs resources to come to fruition, and also being able to have your foot also grounded in a safe space. So I don't want to take the conversation there in a deep, dark way, but the deeper point that I want people to understand is that if the bigger the problem you go after, the more cash you can actually receive, because the thing that the Silicon Valley VCs that are getting bigger and bigger now are really hungry for are true $1 billion opportunities. Yeah. Because if they don't get those, they can't pay back their funds. So one of the things around advice is that everybody will say, get your MRR, your ARR up and to the right. That is not important for a lot of different spaces. For a lot of different spaces, if you have the right market, vision, and team, it's not the metric that the VCs are necessarily going to be anchoring against. Yeah,
that's amazing. That's amazing. I mean, we could go talk more because you went from Twitch and now you're like looking at companies who are doing these crazy super moonshot ideas. I think that's an amazing thing. And it's great that Accelerators exist to do that. So let's go to Eugene. Eugene, just for new startups that are watching this now, how do you guys vet the startups at SparkLabs? What are you looking for? Do you also look for these companies that are, it's a different market. You're not really looking for, or you probably will be looking for half a billion dollar companies, but I'm sure since it's an earlier round, maybe you can talk a little bit about what you guys are aiming at.
Sure. To be honest, we look at everything. We can't just say we just look at 3 things or 4 things. We look at everything, right? And so, obviously you look at the team, you look at the founders, their backgrounds. Does that provide any, like I said, any unfair advantages into understanding the problem better or smarter or whatever? And then, you ask, how, one of the questions that I always ask is, how did you guys all meet? Have you worked together before? Because one of the most popular ways that startups fail is because there's always going to be something of a conflict, right, among the founders, right? And so, just want to know if they've, what kind of background they have, what's their relationships, how they meet, and have they worked together before, and have they fought before? How did they consolidate or make come to a decision? Is always something we want to look at. Second is also then we look at the product, look at the market. Is it a growing market? Is it a shrinking market? Is it a dying market? Obviously you want to go to markets that are big, growing, and not so niche. And then we look at also the product itself, right? So we want it to be globally competitive, right? We don't want it to be too specific to a specific market, so that the opportunity is kind of low. And so we look at everything. I think the most important thing I always ask them is, I want to see how they execute, right? So I always ask them, how long has it taken them to develop something, or how long it takes them to get from A to B or B to C, and see how they're able to execute in getting their product to market, right? And so also I want to know, are they open to feedback? How well do they take it? Are they do they really go out and try to listen to the customers or not, and so forth. So the most important thing is, do they impress me, right? Myself and I think a lot of our founders, we've all done startups and started startups, and so we kind of all understand like what needs to be done to get to a certain point, right? And so we just want to see if have they impressed me in kind of certain way where I'm like, okay, these guys have something that other team doesn't have, and we want to take a great bet. Another thing is like for accelerators, because we're kind of in the early stage in the beginning, and our investments are a little kind of smaller than maybe other VC later stage investments. I think we're willing to take a little more risks, right, into seeding companies, and I think that's kind of one of our things to do, is to kind of provide more opportunities to more entrepreneurs as well.
Great. Well, thanks, Eugene. Okay, so we're going to wrap this up. So I just want to ask you guys one last question as we close out. Starting Pat, you've done this, you've seen all this happen through 2020, and we're into 2021 now. I'm not going to ask you for like a 5-year prediction, but where do you see accelerators in the next, 6 months, or let's say 12 months?
Like number one, you're going to see a lot of them work with later stage startups.
Later stage.
They've been focused on a lot of early stage companies today. So you're going to see them go further and further downstream. I think secondly, you're going to see them do a lot of additional locations. You heard this from SparkLabs and you heard this from Eugene, right? The fact that you guys are now in Taiwan and Australia, the model is working. People want to work with really good programs. So you're going to see that expand a lot more. And the final thing is, it's interesting, right? 100% of accelerators went virtual during COVID for obvious reasons. And I don't think that's ever going to go back to 100% where it's in person again.
Yeah.
So I think there's going to be a hybrid model that takes place going forward, which I think is going to be good for everyone and allows us to democratize a lot more of the support that accelerators can offer.
Great. And Ravi, you've already said you're going to be a hybrid model going forward. What is maybe 1 or 2 points or tips that you might give an accelerator that wants to start building their program this year?
If you start with, don't settle when you're beginning. So if you start with A+ founders, that will be the base for the founders that will come in the generations later. So don't compromise. Start with as high of a quality as you can at the beginning. That's my biggest piece of advice.
Great. And Eugene, finally, just ask you, what's the one thing you've learned doing this over the last 8 years that you could tell another accelerator, like, this is the one thing I'm going to bestow upon you? Choice in hats. Yes, I know.
I think this is one thing that's kind of interesting. Pat, I don't know if you remember when we when we first started, we had a meetup in Singapore, right? And then we had people from New Zealand, we had people from other parts of the world together, and we all met and we were talking about the teams that we selected, right? And there was a common thing that came across that was interesting was people said, every class, there's a team that everyone expects to do well in the beginning, right? And they all have A's across the board from all the people. But then there's these teams, there's also these teams that have, why did they get selected? Right? So people ask the question, why did they get selected? Or, they're kind of like have a question mark. But at the end of the 3 months, that team that was kind of like, why did they get selected, had the question mark, ends up getting the most funding, right? Or performs the best. So I think sometimes when you select teams, sometimes the teams that kind of move you or touch you the wrong way a little bit are the teams that kind of are doing something like maybe Ravi says something out there that's nothing, you don't know what's going to happen, and maybe the timing comes and falls and they really blow up at the right time, right? And the team that you selected and really going to do well, something happens and the timing doesn't working out for them, right? And so my thing is, nothing's for certain.
Great. Excellent. Okay, thank you, Pat, Ravi, and Eugene. Really appreciate this talk. I think it was great. Back to you, SparkLabs.